Now, we start with breaking news. The new jobs report and the president's tariffs are dragging down U.S. markets at this moment. The July jobs report you see right next to me, this just came out moments ago, and it's weaker than expected. You have just 73,000 jobs added last month. But more concerning, the numbers for the previous 2 months have just been revised down by more than 200,000. So this is not encouraging economic information, and it comes as the president's new tariff plan is impacting more than 60 trading partners, including some that have already cut trade deals or at least frameworks. CBS News and MoneyWatch correspondent Kelly O'Grady is making sense of all of this and explaining it to us in very straightforward ways, which we so appreciate. So Kelly, help us understand this jobs report, why its numbers and the revision downward from a previous report is discouraging.
So this gives us a sense that the labor market is slowing down significantly, right? I mean, that number coming in less than 100,000, which was where most analysts expected the July jobs report number to come in, was already concerning. But as you mentioned, we had revisions down to May and June as well, to the tune of over 200,000 jobs. And what that tells you is the significant slowdown is not just a July thing. This has been happening for the past few months. And really what made me nervous was in that June revision, when you look at it all together, it showed that the private sector, right, so not government, everything else, added only 3,000 jobs in June.
Wow. That
is a big red flag. And the reasons that we are seeing this, part of it is the new immigration policy. The White House or the Economic Council just shared why we're seeing some of these revisions. It's the new immigration policy as well as reaction to the tariffs. And anecdotally, we have heard from many businesses, and it is now showing up in the data, that they were very much on a wait and see approach. There was all of this shifting trade policy. They didn't want to make any huge decisions, lay off people, hire a bunch of people. And so they just paused. And that's reflected in the data. I think what's really going to be interesting is now what does the Fed do with interest rates? Because they have been very concerned about inflation ticking up because of these tariffs. But now you are seeing their other mandate, the job market, show weakness because of it. And I'll just note that the last time we saw 3 months in a row where the labor market added less than the 12-month average, you got a half-point rate cut. That was in September. That was that jumbo cut where the Fed looked at the picture and said, OK, we've got to do something to make sure that economic growth doesn't stall.
So as alarming as all of this data together seems for the moment, it may lead to a Fed rate reduction come September, the next time they have the shot.
Yes, that's right. What I will note, though, is before that meeting, we are going to get another jobs report and another inflation report. So there's going to be a lot of data that comes in. And just to sort of, I don't want anyone having a panic attack over their coffee right now. It's not great numbers, but this isn't, we've been through this before.
The sky isn't falling.
The sky isn't falling. This is not March of 2020.
But for viewers who are watching President Trump announce an August 7th deadline for trade agreements, all the uncertainty we have talked about so much around that, should people at home just realize that items will be slightly more expensive in the months ahead? Is that part of the new financial reality?
It is very possible. The other thing that I will note, though, is that over the past couple of months, we have had pretty much a baseline 10% tariff on most countries as well as sector tariffs. We have seen imports coming into the country drop. And so what that the prices drop. And what that tells you is suppliers in these other countries have said, well, we want to make sure that people still buy our stuff in America. So we're going to lower our prices so you don't see as much of an impact on you and me as a consumer. We also know that companies are absorbing a lot of these tariff costs because they want to make sure you and I keep going out.
At least at the front end.
Right. The thing is how long are they going to be able to navigate that? So I think you can expect, most economists do, some price increases on goods. It's just a wait and see of how much.
Not sending us into the weekend with too much excitement, but a fact check and a reality check that we desperately need. Kelly O'Grady, thank you so much.